Hello, Boldly Bossin crew. It's Kay here coming to you with another video. Today we are going to talk about why you keep getting denied when you have an excellent credit score. So I know that it can be so frustrating when you're like, hey, I've got a 750 credit score and I just got denied for that loan. Like, what happened? So today we're going to talk about that. But before we do, I like to start it off with a quote. Life is fragile. We're not guaranteed tomorrow. So we got to give it all we got. Give it everything we've got. So hopefully you agree with that because I'm trying to do my best to give it my all each and every day. So hopefully you are too. All right, who is this video for? By now you should know. This video is for all my single mamas out there, for all my entrepreneurs out there, and if you are trying to increase your credit score, if you are trying to eliminate debt, and you are trying to grow financially, then this is the place for you. I try to leave out the fluff, although I can be a little long-winded at times, but I try to get straight to the point and give you actionable steps and things you can do to improve your own credit score for free. So if that is what you are looking to do, then you're in the right spot. All right. So today we're talking about, as you know, hard inquiries and denials. So let's talk a little bit about inquiries. Let me go ahead and move my face out the way because I know that's not why you're here. You're here to increase your credit score. So let's get to it. So what are credit inquiries? Inquiries are just when someone looks into your credit and they get to see a snapshot of your credit report. So this could be insurance agencies, credit card companies, any financial institutions. It could be a landlord. It can be potential employers, and they're looking at your credit. There are two different types of inquiries. We have a soft inquiry and then we have hard inquiries. Soft inquiries do not affect your credit score. And normally soft inquiries happen when we pull our credit ourselves, or let's say that there's an employment verification, that's a soft inquiry, or if you get pre-qualified for something, that can be a soft inquiry. Hard inquiries, they do affect your credit score, and this happens when an institution, based on your approval, you give them permission and they pull your credit, and then you get a hard inquiry when you are applying for that loan or that mortgage or whatever other kind of loan it is, personal loan. Then that is a hard inquiry. How do inquiries impact your score? Credit inquiries stay on your credit, as you know, for up to 2 years, and they really affect your score for the first year. Inquiries are 10% of your score, and when the more inquiries you have, lenders will look at you and you appear to be a little desperate if you've got a lot of inquiries in a short amount of time. So if you've got 6 inquiries, the lenders think that you are more likely that you're desperate if you've got a lot of inquiries and don't have and you're not getting the approvals, or you've got a lot of inquiries, period. They think that you're desperate because why would you have 50 inquiries on your report? Like, why do you need that much credit? And they also say that people with more inquiries are 8 times more likely to declare bankruptcy than somebody with no inquiries. So remember that banks' big thing is to mitigate risk. That's their goal, is to mitigate risk. So when they see somebody with a lot of inquiries, that can be a little risky. So how do you minimize the impact of hard inquiries? Know exactly what you're applying for, and have a plan before you actually go to apply. And don't spread out your loan shopping. So if you're shopping for a mortgage, you don't want to get inquiries and then 2 weeks later you're getting more, 3 weeks later, and then 2 months down the road you're getting more and more. Or auto loan, like know, hey, I'm about to go in for an auto loan. My report looks the way I want it to look. Now it's time for me to go to apply. And then you need to go apply. Don't spread out the loan shopping. Okay. But so you won't be penalized, for instance, for an auto loan. If you have several inquiries that are that type, auto loan type, made within a 30-day period, normally they will count that as one. But you want to make sure that you're not spreading out that loan shopping, that when you say, hey, I'm ready to apply, you go and you get what you need. Also, sign up for a credit monitoring service so you know exactly what's going on with your credit and when it's happening. And you can see if somebody else is applying for loans in your name and that kind of thing. So just keep that in mind. And of course, you can always get a free copy of your credit report by going to annualcreditreport.com. Now, why are you getting denied? This is the meat of the video. This is one of the most important parts. You're getting denied with a high credit score because you've got a thin credit profile. Most of the time, that is the case. If you've got a 700 credit score, 750 credit score, 800 credit score, but you got denied for the loan, it's going to be one of two things. It's going to be a thin credit profile, or it might be an income issue as well. And I didn't put that one on here, but lucky you, I just fly off the cuff. I'm not scripted, and so I can tell you the real deal. So when I say a thin credit profile, I mean poor data points. So you might have one or two things on your credit only, and then the data points might not be strong enough. What do I mean by data points? Payment history. Your payment history should be 100%. You should have utilization under 10% is best, 0 derogatory marks, age 3 years plus, number of accounts. The more accounts you have where you can show positive credit history, the better. Inquiries. Remember, we talked about this earlier. You don't want to have any more than 3 inquiries on each bureau for the last 6 months to a year, or else it makes you look desperate. You don't want to be looking like you're applying for a million different loans all at the same time. Remember, data points and a strong credit profile are more important than a high score. With a thin profile, you can easily get denied even with a high score. So let me give you a tale of two handsome fellas. So we've got Jim versus Jamal. Jim has a credit score of 745. He's got one credit card with a limit of $1,000, and he's got a car loan with perfect payment history on everything. Okay, so that's Jim. Then we've got Jamal. Handsome Jamal comes up, and he's got a 730 credit score, but he's got 5 credit cards, and his highest limit credit card is a Navy Federal card, and it's $25,000. He's also got a mortgage. He's got 2 car loans. He's got student loans, and the age of his credit profile is 6 years, and he's got perfect payment history. Now, if you were a bank, who would you rather lend the big money to? The big money bags. Who are you going to lend it to? Are you going to lend it to Jim, who only has 1 credit card and 1 car loan, and his highest credit card is $1,000? Or do you think Jamal is a little bit more stable because he's got 5 credit cards with a $25,000 limit? He's also got a mortgage, a great mix. He's got mortgage, auto loans, student loans, and he's got a longer profile age of 6 years, and his payment history is also perfect. I think that if I were a bank, I'd say, Jamal, come on, I got you. And Jim, you might be denied depending on what you are looking for. I hope this is making sense. And also, as I said before, and I didn't put it in the example, but income plays a big part in this also. You want to make sure that, so for instance, if you make $30,000 a year and you're going out and you're about to try to get a loan for $250,000, even though you've got a 750 credit score, that might not work without having a co-signer or someone else that can boost that income and vouch for you. so that they can consider that person's income as well and then vouch for you. Hopefully this is all making sense. That was nice and to the point. All right, if you like this video and what you have seen in this short video, then I'm going to need you to like, and I'm going to need you to subscribe. And you can comment below if you have questions, concerns about what's going on, questions about your credit, how to increase your score, questions about eliminating debt. I'm going to be coming to you with some debt elimination videos here soon. But if you've got questions about any of it, you know where to find me. You can comment in the video, and I'm happy to answer all of your questions. So never miss another video about increasing your credit score and eliminating bad debt. Don't forget to hit that bell. Remember, guys, collaboration over competition is key. You're in the Bold Bossing community now, so I need you to keep boldly bossing up. Take control of your credit, take control of your debt, and your financial future. All right, where did I go? I just want to wave to you guys. All right, guys, that's it for this one, and we will see you again in the next one. And remember, if you have any ideas or any topics that you want me to go over, just let me know, and I'm happy to do that. Also, if you need some extra live support, there is a link in the description that tells you about my new Telegram community. You'll be one of the first to join. I just got the link together today, and I'll be there to help answer any questions that you might have as we grow this community of entrepreneurs and single mamas working to grow together as a community on this journey together, and all come together and make it happen. So we're going to increase that credit and do what we have to do to solidify our future. All right, guys, have an awesome, awesome day, and I will see you in the next one. Bye for now.